I'm going to try something new today, and I hope it all works out. We are trying, well, first of all, I'm in a different layout area, and you will not see me live, but trust me, I am here. Second of all, I hope my audio is working. Yeah, we'll assume it is. And third, we have had hundreds of demands for can you walk us through these models? What do they mean? What do they cost? Can you organize a discount, etc., etc.? So here we are. We are going to do this, and we'll see how it goes. And let me see. Have I got sound? Goes like. Let me see. All good. Yeah. Thank you for letting me know. It's a new thing we're going to try. So we're going to walk through what I call the secrets of support and resistance and strategic profit taking, which is the most important thing in the investment game. And as I mentioned, lots of requests for this. So I'm going to do some intro slides as to what it's all about. And then I'm going to flip over to actual live trading view 2. And of course, now this is financial advice. And as you know, unique content every single day that you will not find anywhere. Now, before we jump in, I always say this: fundamental analysis determines what. Technical analysis determines when. You need to use both. You cannot just do TA alone and expect to win. It's possible, but it's much better if you use good fundamental analysis to choose the right assets first. Second thing as well, ever wonder why expert traders know exactly when to buy and sell or nail dips or hedge? Well, I am going to unveil that secret. And in fact, this is a unique tool that was built over the last 2 years, and I'll explain how too. So first of all, support and resistance. Why is it important? Well, these are levels at which the price of an asset will likely stop and reverse. It's a price level from which market price buying interest is expected to be strong enough to prevent the price from falling further. Remember, sometimes in crypto, when there's high inflation, you need a lot of sustained buying pressure just to keep the price flat, which is hard to do. Same thing, if a stock is diluting, that'll bring the price down. So be very careful of that. Also, support and resistance levels can be identified by looking at a whole bunch of different factors that we have that identify common areas of support and resistance. Now, in the past, I liked, I always had a dream of being able to identify all the areas of support and resistance, and sometimes it was very difficult to do so. But now with models and Python and a whole bunch of data, we can do that. So we will go. And one thing I also want to stress too is layers are not static, they're dynamic in the model that we use as well. The model is based on history, it's based on levels, it's based on volatility, it's based on momentum, it's based on what we call the squeeze factor, and so much more. And I'm going to showcase this model today. And again, it doesn't show one support and one resistance level, it shows multiple levels. And if you know me from the channel, I like to layer in if I want to accumulate a position. I like to buy in at certain levels. The deeper we go, the more I buy in. Typically a factor of, say you buy $100 at the first level, then you buy 300 at the second level, third level maybe 900 or 600 depending on who you are. And that is kind of what I like to do. And the same thing goes for layering out, which is profit taking, which is the most important thing in the markets as well. And this video was actually inspired by G Dinero. He's a valued Patreon member, and he uses the layer model for his trading. And I just want to share with you some of the things he actually said. He basically spoke about the strategic use of the layer in, layer out model, and he used it to identify ideal transaction points for selling call options when the stock value reached a higher layer and buying them back when it decreased to a lower layer. We'll talk about that as well, kind of swinging between layers, which is very powerful. He also integrates multiple indicators like IADSS and the trend model as well. And he finds that optimizing these indicators really increases his odds of winning in the market and reducing cost basis of positions like Google. So let's jump in and talk about as well the importance of layers, just to re-emphasize before we start looking at some charts. First of all, it can be used to enter a position for the first time, or it could be used to build a position, accumulate a position, layer into a position. Also, I use it extensively for hedging a position, identifying local tops to be able to take some profit off the top. For example, for me, I like long underlying positions, but I want to take a little bit of profit where I can without selling my underlying position, and I do that through hedging, and this helps with that. Also, if you want to get out of a position, I'm not loyal to any asset, and I have every year I do some spring cleaning and also take profits in different layers. I'll also show a profit taking model as well today. So the first chart we're going to look at is Tesla, and let's go live to Tesla. And the key here is it is a volatile beast, but let's jump in to the actual Tesla. I'll make sure I can do this. Click this one. All right, we should be in Tesla right now. So I have my layer model activated. I can turn it off, and then it's without, and I can turn it on. Also, I'm going to flip between candles and actual price line. And the reason for that is very important in a minute too. I'll show you. Also, I can turn off kind of annotations and everything else, but this is basically Tesla. We can zoom up and down. Let's turn off some of this noise for a second. And I want to show you where we came from. We had the most amazing buying opportunity earlier this year, late last year. It was just insane. But I just want to focus on just the last, say, 6 months or so. And just to show you how these layers actually work. So we have the layer model. I'll show you per the model. And there's a couple of things that do need to be tweaked depending on the asset you're in. There's different settings. So for things like volatile equities, I use aggressive setting. For things like volatile cryptos, I use very aggressive. Okay, so I want that to be clear. If it's something slow moving like a Chevron or a Ford, I'll just use neutral. Or something that moves really slow like gold, I'll go conservative, but I don't trade gold. Also, you can look at the trend bias now. If it's been relatively stable over a long period of time, you can go longer trend. If it's been very volatile over a recent period of time, you go recent trend, or else you can pick neutral as well. And then the layers, you can have default layers, which is very few, or more. I like to look at them all. And the width you can determine. I've got high, or you can go very high if you want, but high is good enough for me. And then just the most important thing is so you can cover all of the price action with the layers, and you know the prices. Now, what I'm going to do as well, most important, is you set the anchor point right here. That is the price at which the price goes through the 200-day moving average. That's the red line here. I'll turn it off, turn it on. It's critical. That little anchor is right there, and it's very important to be in an asset that's has upward momentum. Of course, you don't want to buy a loser unless you're shorting, and also put that anchor point in place. Now, let's look at some of the price action here. I'm actually going to toggle to candles because you will see down on the right-hand side a couple of things. You can see the 52-week range went up to $299.29. The top of this model goes to 305, so it missed it by $5. So the system is precise, but not to the penny. Now, if you look at your candles, you will see how things actually look very, very different. You will see exactly where the price action goes and retains. And also there's the trend line in the background here, as you can see too. But let's go back to the line just for a feel for how it is now. How I use this for Tesla is I have a snipe area number 1, that is I buy at 224. If I'm looking to accumulate a position, snipe area number 2 is 239. And then right now we're heading back to 255. As we speak, Tesla's at 250. So it bounced clean off 239 back up. Sometimes it can break through multiple layers. And this is what's interesting because you can see Tesla here basically nearly pierced layer 6, fell down all the way through layer 5, even down. Let's turn on the candle again so you can see. Actually, we can turn on the bars and how far we got down here. I'd have to go into the minute chart, but you can see it fell down to 208, 209, and the bottom here is 205, 204.9. So again, it's within $2 or $3, but you get the idea for how this is kind of precise. Now, we bounce up, we go 224, and then it hit 239, and it shot right up to 255. It hung around there a little bit, down, up, down, and then went all the way to 277, hit resistance, and fell back down again, all the way, not one, but 2 layers. And this is kind of per G Dinero. He'd be selling a call here at 277 and then buying it back when he sees the trend turn. And that's key. So that was Tesla. Now let's go to another chart. Let's look at Google for a second. Let me pull it up here. Now Google, the reason I'm showing Google is this is what G Dinero is playing. And you can see exactly how he played it here in the layers. Now a couple of things I do want to talk about is, first of all, this 200-day moving average, the anchor point, which is so critical when it broke through right here. And what's also important is once Google broke through the 200-day moving average, it didn't look back. Now, part of this, you could argue, is because of the AI revolution, etc. They're a bit of a laggard, but now they're beginning to get their act together. But you can see how it hovered around these different layers. Let's switch to candles, get a different feel. And you can see right here, 115.6 support. Shot up, broke through 124, fell back down a bit to 120, all the way up to 130 plus, hovered around there, fell below it a few times, and then all the way up to 139, bang, hit it once, fell down, hit it twice, fell down, and then went all the way to 130, and now it's heading maybe back up again, depending on what happens with the overall broader market. But that's a good example of how you can use it for Google. Now, let's look at Bitcoin for a second. Bitcoin, we're all fascinated by Bitcoin. This is from the beginning of the year, and you can see a lot of busyness here. I'm going to turn off the candles and go to the line so you can see the precision around some of these layers. And again, we'll start at where we first hit. You can see the anchor points here. Actually, when I turn on the candle, we see we broke down to 20K. But before, when all the good stuff happened earlier this year, we shot straight up to layer 2, fell down below layer 1, straight up to layer 3, fell all the way down to layer 0, and then back all the way up on this BlackRock ETF news, shot all the way up to layer 6, down to layer 5, up to layer 6, down to layer 4, up to layer 5, down to layer 3, up to layer 6 again, down to layer 4, and etc. And you can see where all the confluence happens. I put green and red arrows for resistance. When you turn on the candles, you get a better view for exactly how high they hit and what it looked like. So you know exactly when to hedge or cover or when to buy. So I was a buyer of Bitcoin at $25,021. I broadcast that very exclusively and hit it a couple of times so far this year. And where did I get that 25,021? Well, I wanted to be slightly higher than 24,900, which is per the model, to make sure it hit. Okay, now if I want to hedge, you know we're going to hit resistance at 27.7, and we're at 26.9 as we speak. So we'll see if that happens as we go forward. Now, next chart will be Ethereum, one you all kind of know and love. Here again, breakout, smashed through the 200-day, straight up to layer 2, down to layer 1, up to layer 3, down. Let's turn on the candles to see exactly how far this went down. And you can see here, we had the dip to 1350. Didn't quite hit the 1320, but it's again off by 30 bucks. I'm going to put the line on again because then you can see more. Then it shot all the way up. And what's incredible here, literally it pinpointed layer 6, 2127, fell down to layer 4, up to layer 5, down to layer 4 again, nearly breached layer 5, then fell all the way down to layer 2. And this is the key here. You can play the layers depending on exactly what your goal is, whether it's taking profit or accumulating, etc. Speaking of taking profit, I forgot to show one thing. I do have this. Let me switch cameras if I can do that. Hold on one second. We're going to go here. Yes, this is for Bitcoin. Now what I've done, and I'll share this on Patreon later. By the way, don't join Patreon because it's the end of the month. They charge per month. So make sure that if you're interested in joining, join the first of the month. But this model will be on Patreon. Now, it's a profit-taking model. There's different versions. You can toggle it to whatever you want. But when you plug in the layers, okay, if we look at this model here, layer 6, layer 7, layer 8, layer 9, layer 10, that corresponds to the exact layers here we have in the chart. Let me show you, and I'll come right back to that. So this is Bitcoin, And this is based on kind of the settings that you can go to and how high we expect to go this bull run. These are conservative settings, but you can juice this up depending on how aggressive you want to be. But conservatively, I think Bitcoin will hit 61,770. That'll be the top layer, layer 10. Other layers are 55K, then 45,791. Layer 7 is 35,914, and layer 6, 29,811. So I just want to share with you the importance of this profit-taking discipline that I like to employ, although I must admit I wasn't good at it last time around because I didn't expect so many black swan events to hit, and I was caught off guard. But that's not going to happen to me again, that I guarantee you. So let's go here and go back to this model. You can see what would happen if we had one Bitcoin and we sold it in layers, starting at layer 6, 7, 8, 9, 10. Okay, now the token sold, we can assume we sell 20% of our position, not 20% of the initial position, but 20% of our position. So at the first layer, Bitcoin price, we say our cost basis is 25K. Bitcoin price goes to 29,811, and we sell 20% of it. Then we pull in $5,962, and we still have 80% of a Bitcoin. So our total balance now goes from 25K to 29,811. Then layer 7, we sell another 20% of the position, which is 0.16 of a Bitcoin at 35,914. We pull in 12K, etc., etc. The next 20% we sell at layer 8. We pull in another $17,000 in total. That is the combination of the amount we sold plus the previous layers, and on and on. And then we get to a total sold of dollar value of 28,330, while we still retain 0.328, 1/3 of a Bitcoin. So we haven't sold it all. We still have some Bitcoin, but we sold 2/3 of it. And the total balance now is basically 49K, call it, versus if you didn't take profit, you would have had $61,700 in value. But the only thing that's really impressive is the amount of money you left on the table is only $13,000. Remember, a bird in the hand is worth two in the bush, and it's always good to take profits. We'll do another one of these as well on Ethereum in a minute, but let's get back to the chart. Let's go to Ethereum. That was the layer. So here, Ethereum, a different kettle of fish here a little bit. Oh, I almost forgot, by the way. I have a visual. Sorry, jumping around it because I'm doing this for the first time this way, but I want to share with you the visual of what the profit taking looks like. You have in blue the total amount sold per layer. In red, you have the value of Bitcoin remaining at the current price per layer. And then yellow is the total balance of cash and Bitcoin. And you can see what's interesting about this methodology is your dollar value of Bitcoin kind of stays the same even though the amount of it falls, but you keep taking money off the table. The key is to take your profits off the table and deploy them on faster assets if a certain asset runs out of speed. So that is kind of the key thing here. All right, so let's get back to Ethereum for 1 second and see what's happening here. So this is the Ethereum chart. Again, the settings. This is a layer model. We go to the settings here. Very aggressive, as I said. Things like TSLA, be aggressive, very aggressive on crypto. Look at the recent trend because there's recent volatility. And that's basically it. Your anchor point is when the price crossed through the 200-day moving average. And look at layer 6. It nailed it perfectly. And it fell down. Well, it fell down to, let's turn on the candles, make sure we can see exactly what's happening here. As I mentioned, 1360, and the floor price here is 1320. So it missed it by 30 bucks, shot all the way up, and again, toggle back to the line to see exactly what's happening. So again, you could swing trade this, sell at layer 6, buy back in at layer 4, sell at layer 5, buy back in at layer 4, etc. And then it crashed down back in the middle of June, fell all the way down to layer 2, shot all the way back up to layer 5. That was a big move. And then now we're back down, smashed through layer 4, layer 3, layer 2, and now it's heading back to layer 3, I reckon, in short order, check my video on Okta on Tuesday where I spoke about the ETH Bitcoin pair. So that is Ethereum. Let's look at Ethereum profit taking as well for a second, tying into Bitcoin profit taking. So that was the Bitcoin profit taking. That was the Ethereum chart. Here, the same type of example. Imagine you have one Ethereum, you bought it at $1,500 this week, and then you want to sell at layer 6, which is 21.27. Second layer, 26.25. You sell another 20%. Layer 8, 3,400. Layer 9, 4,200. And layer 10, 4,700. That means if you held the Ethereum, you held the 1 ETH, and it went to 47.37, where I believe it'll go this bull run, which is not pretty much where I went last bull run. But if you waited and didn't take profits along the way, you could collect, if we hit layer 10, 47.37. If you sell up along the way, not only do you keep, same thing, 1/3 of the ETH that you had, but also you only leave $1,000 on the table, and that's magical. So again, bird in the hand is worth two in the bush. Always take profit off the table when you can. All right, next chart, we're going to look at Cleanspark, which is kind of like a hybrid between Bitcoin and an equity. So this is Cleanspark chart. Again, Cleanspark is one I know very well, but just to see how this actually performed, we'll flip to candles to get a feel for how they look. Wow, layer 7 pierced, fell all the way down to layer 4. That's a big move from 750. I shorted Cleanspark at this time. All the trades are public. I can't remember the exact dollar amount, but I said, whoa, this is crazy. So I just sold a bunch of calls that were kind of at the money, which worked out to be very, very lucrative. Same thing with MicroStrategy, by the way. But here you can see the layers. This one came all the way down to layer 4, shot back up to 7, fell again all the way down to layer 3. So we're having lower lows up to $5.30, and then down all the way to layer 2, back up to layer 3, layer 4, and then back down layer 1. And here we are again. You can see today it actually hit hit $4 on a little bit of volatility, but the miners are weak. A lot of fear about the miners. So that is where we are, and the importance of profit taking. You know, a lot of people believe, oh well, if we just wait and hold, it can be the best way forward, but often that is not the case. So one other thing that was requested from the community, we do have 50% off the first month if you want to try any of these tools. This is the layer in, layer out model. Every week we'll go through another model as well as integrate secrets of trading and profit taking, etc., to help you all be better than Wall Street. So the coupon code is month50, and that'll be available, I think, for a little more time. And there's lots more as well. Check out the website, InvestAnswers.io. So with that, everybody, thank you so much. And remember, don't join Patreon today because they'll bill you for the entire month of September and again, 1st of October. So if you are interested in joining, wait till the 1st. And we have proven we can smash Wall Street results, and now you can too. So thank you for being here. Have a great Friday. I'll be back tomorrow morning with the weekend recap, everybody. And thank you to the mods in the chat too. See you later.